Welcome back. The clock is ticking. Yes, we're moving towards the 31st of March, and that's why this is the tax planning special on Money, Money, Money. Well, we've been in conversation with our guests, but joining us now is a very special participant on this show. We have Anshul Jain, who's one of our viewers and who's been watching and who's been responding in with his own tax query. Anshul, I believe you are a working professional from the city of Mumbai.
Yeah.
So welcome to the show and thanks for coming in.
Thank you.
How can we help you? Do you have your tax house in order for the year that's ending?
Not at all. I have a lot of queries on taxation.
Go right ahead then.
Okay, so first thing, so my annual salary is about approximately 15 lakhs and TDS is deducted by my employer directly every month. I do not have any other source of income. Do I still need to file my IT return?
Yes, I would say so. The reason being, what the rules say is that if your gross salary, without claiming any deductions, is below the threshold limit, then you are exempted from filing your tax returns. But in your case, that is not the scenario, so you would need to file your tax returns. In fact, I would take one step further and tell you it is in your own interest that you file your tax returns, because this document not only entitles you and it gives you a clean sheet with the income tax department, but even otherwise is used in many other places. In case you wish to avail of a housing loan tomorrow or any kind of borrowing, you need to prove your credentials, and which your income tax returns help you with.
So no escaping the taxman, you've got to file your returns.
Yeah.
Anything else that you have on mind for this year?
Yeah, so I think one more query I have. So I own a car and I use it for my official purposes. But my employer reimburses my fuel and maintenance expenses. Now, do I need to include that as part of my income, or that is just like a reimbursement?
Mayur, would you take that up?
Yeah. So as far as company provided cars are concerned, the taxable value is much lower, which is around 40,000 per annum. Whereas if you use your own car for official purpose and without maintenance of documentation, the exemption which is available to you is only of 40,000, and balance reimbursement would be regarded as your income and will be subject to tax. Unless you are maintaining logbook for official as well as personal use and is being certified by your employer, in such an event you can get a higher deduction depending upon the usage of car for personal as well as official use.
Any other query? Any other
So I think
question?
last, so I've actually not filed my return for year ended March 15. I've missed on that. So can I still file it, or do I within the time limit?
Yeah, so you have already missed the timelines within which you have to file the return, and therefore you
That sounds scary, but is it scary? Is it that scary?
It is not really scary.
Okay.
Because what you have to do is, and it's a discretionary penalty which tax officer can levy if you are filing after 31st March 16 for March 15 return. And that penalty is only 5,000 rupees, but certainly it's a discretionary penalty which a tax officer can decide to levy. Generally, we have not seen tax officer has been lenient and they don't levy any penalty as such. The other aspect which you need to be knowing is that by when then I should file my return. You have to file your return by 31st March 17.
Okay, Anshul, hope that answers your questions, and thank you for joining us on the show.
Thank you.
Well, we also have another viewer who's joining us on the phone line, so let's try and connect with him. I think we have Vishal Khandelwal with us. Vishal, hi, can you hear me?
Yeah, I have questions. In 2008-9 assessment for the year, for which the assessment year was 9 and 10, while submitting my ITR online, I forgot to mention this 1.5 lakhs rupees of amount as which I can claim under ATC. While my Form 16 specifically states there is no tax demand, and I have, if I consider this ATC amounts which I have invested in insurance policies and then this 5 years long FDs, but unfortunately while filing it online, since it was my first ITR filling on the system, I forgot to mention with the understanding of that. Since it is already part of my Form 16, so hence the details need not to be updated on the system. And for that, I got a generated of tax demand from the IT department is around 31,000 rupees. I don't know after 5 years whether it is acceptable by the IT team or whom should I pursue with this matter. Or at all I have to pay the demand and close the matter.
Well, you've called on the right show because we have Mayur here to help out. I don't know, Mayur, what his options are, because it's already been 5 years. He had, very legitimate deductions that he wanted to claim under ATC, but an error over there. And now this tax demand has come. What should he do?
Sure. So there are a couple of ways one can do it, but are we eligible now, given the time has passed by? So if any error which has happened while submitting the return, that can be rectified by revising the return. Now the revision has to happen within 2 years' time from the year in which you have filed the return.
Okay.
Now we must have exhausted this time limit. We are now way ahead of the time limit. So therefore, we may not be able to revise the return. I'm not sure whether the return has been selected for scrutiny or not. If it is selected for scrutiny, you can make a claim before the assessing officer, giving appropriate documentary evidence, and he should be granting those benefit to a person. But if this is not possible, probably one can make a rectification application to the tax officer. They are not bound to rectify it because such application needs to be made within 4 years from the error which has occurred. So when the order was passed, at that time, you could have made an application within 4 years. Now if you have missed this deadline as well, then probably, we might have to write to Central Board of Direct Taxes to consider it.
Okay.
And under their discretionary power, they can consider it. And one has to just explore this possibility then.
So Vishal, your best bet is catch hold of a good CA friend and try and present your case, because it is a factual case, but then the discretion is entirely the tax man. You can't thrust this upon them at all, considering the timelines that are involved. On that note, thank you gentlemen so much for taking out the time and joining us today. We'll wrap up this edition of Money, Money, Money. Thanks for joining in. Our email ID is on the screens, as is our Twitter handle. Keep reaching out to us. We'll be back next week.